All right, welcome to another episode from the Chart Readers. We are continuing the major market breakdown, looking at the SP-500 and then the SPY, the ETF equivalent. Look, it's been a beautiful January, and all it's been doing is riding the 8, breaking moving averages, and using the 20 as a bounce point once right here, right? Unfortunately, and actually twice, I would even give this a second bounce on the 20, right? It goes beep, and then beep. Unfortunately, it looks like we couldn't get a third beep, and we are now under. But look, it's a doji, and you should know what that means if you watch my videos. If not, we'll get to that shortly. Real quick, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how things are setting up short term. I will look at the monthly as well, since it's one of the indices, right? We have our 5 moving averages, these horizontal support and resistance lines that I do draw manually myself. And then when we're done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, real quick, if you can please like and subscribe, it does really well with the YouTube algorithms. Nonetheless, I sincerely appreciate your time, all right? So let's get into the details. Real quick, again, I'm not going to repeat myself too much, right? But good things happen over the 8 and good things happen over the 8 and the 20 because that's, that should be the bounce point when things get, a little iffy, right? What I don't like is the last couple days, right? Because actually we saw this same thing with the NASDAQ chart if you watched the last video, but we're doing all right. We definitely come under. We have a nice couple days of bounce and then unfortunately just can't quite get over that last big candle, right? I often say use that last big green one just as an extra little, indicator of how things are going, right? So yeah, obviously we break the 8, we get a relative doji that I say doesn't count, and then yeah, a real nice confirmation after, right, with 3 days. But yeah, we couldn't get over that. So how good is this really, right? In my book, not good enough, and clearly that's exactly what we see here, right? Obviously, look, we talked about it. I made the very, very sophisticated sound effects, right? But yeah, you want to bounce on the 20. That's how these two lines are supposed to work with each other. And then when you're under both, we've seen it, right? Sorry to zoom in and out so much, but really bad things can happen under because once you're under, it's hard to get over both, right? And then once you're over both, it's hard to get under, right? That's how all this works. So what are we looking at immediately? Look, I'm gonna be saying we're gonna go down, but overall, just like I did with the NASDAQ video, I'm still relatively bullish and happy as long as we can stay over the 200 moving average, okay? Right now, the 3 of them, the SP-500, the Dow Jones, and the NASDAQ are all over it. And as long as all of them stay over it, we're day to day in a good place. When I get to the weekly, there's still a little bit more work that needs to be done to put us in a weekly bull market, which is much, much better than a daily bull market, right? But hey, just keep cooling down healthy, keep bouncing, and never lose the 200, and we're good to go because that'll give the weekly enough time to kind of catch the daily, okay? So again, I hope you see it before I even say it, right? But basically, this 4,000 number is what looks like it's coming, right? We have a support line at 39.8. We have the 50 moving average pretty much at that 39.8 number, right? And in the next couple days, it looks like it's going to kind of keep going up, right? So, yeah, I think as we come down, it looks like this bad boy is hopefully what's going to catch us, the 50, right? And I much rather talk about the 50 catching us than worry about these lines right here, right? I'm just really glad we have at least one more layer of protection before we talk about losing the 200, right? So I am not talking about the 200 getting lost at all right now. I'm really focusing on the 50 catching us. And yeah, it sucks. I don't want to go down, but look, relatively speaking, we're not going that much, right? 400 is 10%, 5% is 200, right? So we're literally talking about like 2.5% going down. Not horribly significant, right? But yeah, maybe enough to cool us down a little bit before we get a nice run, right? Because look, when we had this run, MACD was super low, was actually in the negatives. RSI was a lot lower, it was in the 30s, right? So I'm okay bringing these down, bringing these down, bringing these down, and then hopefully redoing these nice little escalations to give us one more of this, right? So One last time, not trying to beat a dead horse, but just stay over the 200 on the daily. Okay, that's all these things have to do. So look, this is definitely an interesting chart, right? And I often talk about the spacing on the moving averages. It matters on the daily and it matters on the weekly, right? We definitely get a break of the 50 with good confirmation. But look, that 100 was right there, just a little too close, and it never really let this thing take a breath after taking down. Look, the 50 is right in the middle, right? I mean, this is not we already know how difficult it is to break these two. So now you're starting to get deeper and getting closer to that final boss, right? So the 50 is no joke. And the 100 is even harder, right? So you can only expect so much. We've actually now lost 50% candle, which is a little disheartening. But look, this should be really hard to lose. This 4,015, right? You have two moving averages right here. I often say it's really hard to break to. It's really hard to lose to, right? And yeah, you can kind of see it loses two here, but then quickly comes back and goes well beyond that, right? So again, if these two are lost, this one's pretty close too, and by no means am I expecting it to go much lower than 39.2, right? We should not go lower than the 20 on the weekly, right? So, and then real quick, okay, I talked about the weekly a little bit. You can see all five lines are pretty much running parallel between the 100 and the 200, right? That's actually how the other, like, let me just flash it real quick. Here's comp Q for NASDAQ. You can see 1, 2, 3, 4, 5. They're all just kind of going right there. And then let's go to the not DJO, DJ-30. Again, oh, there we go. 1, 2, 3, 4, 5, right? This one's on the top. NASDAQ, if you saw, was a little closer to the bottom. And then the SP-500 was in the middle, started going to the top. Now, kind of based on what we were just saying, right, might come back a little closer to the middle, right? I want all three on the weekly to be above all the moving averages. It took a while for it to happen on the daily. So, you know, that's now hopefully going to transcend into the weekly as well, right? But that's pretty much what we're stocking on the weekly, is just get over all moving averages. How close are they all to the top? And, you know, how close are they all to the bottom, essentially, too, right? But right now we've been hugging the top, right? And hopefully all we're doing is a cool down and a reattempt back up, right? So I'm still relatively bullish, even though we're talking about going down just a little bit right now, right? What does the monthly look like? Okay, look, this is actually what I was kind of hoping we saw on the NASDAQ if you just watched the last video, right? I'm okay with the Doji. Obviously, this chart's a little different, right? But I kind of wanted a Doji on the NASDAQ to give next month the chance to do it, right? We had a break of the 8, a loss of the 8, the break of the 8, and, you know, not really anything close to the 20 getting broken, right? So I'm okay just fighting for 8 confirmation because, again, since January of last year, all we've really done is trade under it, right? So closing twice in a row above the line, even if it's bad confirmation, but just doing it twice over the line is at least a step in the right direction, right? So I'll take just stay over this 32.8 line because roughly speaking, 50% candle is like just under that, right? 39.7 is what it looked like. So stay over this. It'll make me believe we're still over 50%. We'll actually technically be over the 8 2 months in a row for the first time in a good while, right? So, but nonetheless, you should already know nothing sustainable is really going to happen until we get over the 20 on the monthly, right? So, yeah, just keep all that in mind. But yeah, overall, hopefully all we're really talking about is a healthy cool down on the SP-500. So coming to the SPY, all I want to do is make sure the charts look the same. And yeah, it looks like it does, right? We're under the 8 2 days. We're definitely under the 20 here. I like that the 50 is over the 200. Hopefully this 400 and the 4,000, those are the numbers that line up, right? So hopefully this catches us. Worst case, the 50, just like the other one. Exactly the same weekly chart, actually, right? Let me just flash it just in case you forgot. But look at that, exactly the same, right? And again, I'm not trying to repeat the words. I just want to make sure the ETF looks like the index itself, right? And then coming to the monthly, perfect, exact same. So overall, they're both telling me the same thing. Hopefully, it's a good, healthy cool down, all right? Hey, I hope you're learning. I sincerely appreciate your time. And yeah, more videos are coming.